Hey tech lovers, buckle up, because today we're diving deep into the juicy news surrounding Palantir Technologies Inc., better known to NASDAQ as PLTR. There's a lot of buzz and excitement around this stock, and we're here to unravel why it's trending and catching the eyes of so many investors lately. So why is Palantir making headlines today? Well, to say it simply, the company has been on fire in terms of stock performance recently. Over the past month, Palantir shares have skyrocketed by 27.2%. Decisively outperforming the Zacks S&P 500 composites, admittedly impressive but comparatively modest 4% gain. When we compare this with the Zacks technology services industry, which itself only saw a 7.4% gain over the same period, Palantir's meteoritic performance becomes especially eye-popping. Palantir Technologies is a company that specializes in big data analytics, and their stock often gets a bump when there's news suggesting imminent business growth or a significant shift in their operations. However, the real magic lies beneath these headlines in their projected earnings, which have been continuously adjusted upwards, a clear signal for investors. For those wondering about the finer financial figures, here's what you need to know. Palantir is expected to post earnings of 0.9 cents per share for the current quarter. Sure, a single-digit earnings per share might not sound like much, but when you realize this is a 28.6% increase year over year, it's evident the company is on a robust growth trajectory. Even more compelling is the Zacks consensus estimate, which has bumped this projection up by a remarkable 46.9% over the last 30 days. Zooming out a little, for the current fiscal year, investors can look forward to earnings projections of 36 cents per share, marking an impressive 44% climb from the previous year. And next year, the golden numbers are currently standing at an anticipated 44 per share, an additional 22.6% increase. The consensus for these figures has also edged up over the past month. But Palantir isn't just about shiny EPS numbers, its revenue story is equally compelling. For the current quarter, the projected sales of $705.1 million mark a 26.3% hike from the same period last year. And looking at the bigger picture, Palantir's expected revenues for this fiscal year are $2.76 billion, followed by an anticipated $3.36 billion for the next fiscal year. That's a 24.2% and a 21.5% increase respectively. Absolutely nothing to scoff at. In their last reported quarter, Palantir brought in $678.13 million, which was a heartening 27.2% growth year over year. And the surprises just keep coming. They beat the Zacks consensus estimate by nearly 4% for revenue and 12.5% for EPS. Not only that, they've done this consistently, outperforming revenue expectations for the past 4 quarters. Now let's touch on valuations, because knowing whether a stock is fairly priced is crucial before swiping right on that trade button. Unfortunately for budget-conscious buyers, Palantir appears a bit steep. According to the Zacks Value Style Score, Palantir is graded an F for valuation, indicating it's trading at a premium compared to its peers. So what does all this number crunching tell us? Despite a rich valuation, Palantir, with its Zacks Rank 2 status, suggests that it might continue outperforming the broader market in the near term. This status is anchored by solid upward revisions in earnings estimates, an indicator often correlated with positive short-term stock performance. So Tech Tribe, keep an eye on PLTR. It seems like this data analytics titan is gearing up for a promising future, chock full of growth and potential. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.